At the bottom today, the sellers weren't just afraid of the bear. They were afraid of a recession. The market goes down endlessly when there are recession worries, but it almost always overshoots. The proprietary oscillator that I follow from the S&P hit -7 today, which is a level where you have to hold your nose and buy something, because we almost always get an oversold bounce from that level. In challenging times like this, I rely on both my own history of giving up at the bottom 3 decades ago, as well as relying on the S&P 500 oscillators. I did this very morning on my morning meeting program with Jeff Marks, proprietary to club members, that would have had you do this as we sure did, with abandon right at the bottom. The reason why I am inclined to want to buy is that I don't think we're in a recession. Now, people want to sell right here, and the reason why they want to sell right here is that they want to get rid of the pain, okay? Now, getting rid of pain is an emotional issue. I've gotten rid of pain in Confessions of a Street Addict. You can read a moment where I got rid of pain and how wrong it was. So what you have to do is the opposite of pain, which means you have to do some buying. And we did, and did, and did, and did. Now, in recent years, we've had 3 recession scares. The February 2018 massacre, when stupid VIX options traders made us feel like we were headed for a crash. The late 2018 Jay Powell massacre, when a new Fed chief glibly talked about lockstep rate hikes. And the dawn of the COVID pandemic in early 2020. Each scare seemed unfathomably dangerous at the time, just like today. It's never easy to put in a buy order and be down $1 by the time you get the report, especially when you're playing with an open hand, as we do for the CNBC Investing Club. But that's what happened at noon today. We looked like idiots for a half hour. Geniuses at the bell. You had to anticipate the bottom because they can happen in the blink of an eye, like we saw today. The sellers ran out of firepower. We got a classic crescendo bottom, also known as a selling climax. Right now, some investors have an unshakable belief that when Fed Chief Powell speaks on Wednesday, he'll take a much harder line than we've seen before because inflation's so out of control. They think he'll use harsh words that will more than justify the recent sell-off. Of course, you also have to factor in Ukraine. Yes, that's a tough situation. The futures were looking up last night, right before President Biden told our diplomats to evacuate their families, which sure makes it sound like a war could be on the cards. More on Ukraine later. But make no mistake, this market is gripped by the fear that Jay Powell wants this economy to slow down in order to break the inflationary spiral, and he will do that, and it will hurt a lot of our businesses. So why not just sell here if you really like it? You know, if you really want them, you buy them back, right? You buy them back after Powell speaks. Maybe the next day. Maybe the end of Wednesday. Well, that's what many managers did today in the morning. They dumped, they capitulated, hoping to be able to buy it back Wednesday. At the time, it seemed like a very rational approach, but since when is stock market rational? For example, this market at its ugliest factored in a tremendous amount of fear that could only be handled by those with ice water in their veins, regular Patrick Mahomes types, or those with a plan, the Andy Reid types who diagram ahead, know they need what they need to do, and know they need to buy when stocks hit the right levels on the way down. That's a form of discipline. It's a discipline for me. It's worked in practically every downturn except the Great Recession. It certainly worked well today.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.